All right, fam. Welcome to ELEKTRON FX Bootcamp Day 2, the evening session. And this is multiple time frame analysis, right? I know that this is getting more difficult because we started from the easy concept and now we're diving a little bit deeper. That is how knowledge is, when you were in secondary school or primary school, step from 1 plus 1 equal to 2, then 2 plus 2 equal to 4. Then you now start saying things like 1x plus 1 equal to 4, and then you go right to simultaneous equations and all of that, right? So basically, that is how Forex is, right? As you progress, you go deeper and deeper and deeper, right? If you have not gone through the morning session, I'm not sure you really understand this session because this is the continuation of the morning session, right? This is the ELEKTRON FX Bootcamp, a free bootcamp, 3 days with Geoffrey, the sniper trader, right? So we are going into multiple time frame analysis, right? When we, this is where many traders make the mistake, or this is where many traders ignore, and it tells because you see, your result is the proof that you either know what you're doing or you don't know what you're doing, right? The goal of trading is to make money, and if you're not making money, it simply means that you're not doing what is right, right? So that is why I want to bring to the surface what multiple time frame analysis is all about, right? So what, first of all, for another, many of you are quite new, right, to Forex, and I want to just use this moment to introduce to what we call time frames, right? Now, what is a time frame? Right, what is the time frame? So I will just define time frame briefly, and then we head up to the multiple time frame analysis. Time frame is simply time frame is simply a set of candles, right, representing a specific time period, right? Right. So that's what time frame simply is. Simply a set of candles representing a specific time period. That's the definition of a time frame, right? It's a one word. It's one word. It's one word, time frame, right? So it's simply a set of candles representing a specific time period, right? So what do we mean by that? That means, if you look at my chart here, I will show you how to do it for your MetaTrader. If you look at my chart here, look at where my arrow is pointing. You can see 1 minute there. Can you see that? So 1 minute simply means that whenever I click on the 1 minute, every candle you see there represents 1 minute. That means from 6:57 to 6:58 is one candle, right? So let me go to 1 minute time frame. So that's, oh yeah, oh God, let me undo that. Right. So let me just okay, let's start with 2 hours. Well, let's say I am now. Let's start with 2 hours. Look this here. This means that each candle you see here represents 2 hours. Right. So let's go to 1 minute and see. Let me just use this one and go to 1 minute. I was trying to analyze something here. Right. So yes. So this is it. This is 1 minute time frame now. This is 1 minute, as you can see. And each candle here represents 1 minute. As you can see, the time is counting. Can you see this? You can see the 38, the 38, 34, 33. I said it is going this thing by the right here. I said it is reducing. That means after 27 seconds or thereabout, this candle is going to close and then a new candle will form. All right. So each candle here represents 1 minute. That means few minutes ago, the price was where at 3059. Then the next minute it dropped down to 3032, and it dropped to 3025. That is how the 1 minute time frame has been dropping and reducing. And now this is Ethereum Charts. That means the current price of Ethereum is currently $3,046 or thereabouts. Can you see that? This is what it means. These candles represents, each candle here represents 1 minute, 1 minute, 1 minute, right? You need to read up more on this. I cannot really exhaust everything on this for now. So let's go to 5 minutes and see what it looks like. Each candle here represents 5 minutes. Can you see these ones are less in number? Can you see this? Each candle here is 5 minutes, right? That means now it's 7:15. Once it's okay, every 5 minutes a candle is printed here. I mean, this candle was there by 7:10, now it's 7:15, and that candle has come. So every 5 minutes, a candle print. So you can go to the next one, 15 minutes, and all of that. So we have different time frames. Look at it. Each candle here represents 15 minutes. That means one candle here is 15 minutes, one is here 15 minutes, 15 minutes, 15 minutes, and that's how it is. So you have different time frames. That's 45 minutes. We even up to weekly. If you go to the weekly now, you see. Can you see weekly? Let me just delete all of this so you can see clearly. I was trying to analyze some things on my page for my Telegram channel. So I see this is a weekly time frame, right? So you can see that each candle here represents 1 week. I said these candles are fewer. When you go to the bigger time frames, the candles get fewer and fewer, and that's what it means. So now let's go to daily, right? Each candle here represents a day. That means this candle you see here was yesterday. This is today's candle. This was day before yesterday. This was about a few days ago, and each candle here represents a day, right? And you can see that fewer. As you go bigger, it gets fewer, right? So you know that it takes in a day we are having only 24 hours. That means in one day we can have only 24 candles in a day, right? If it's going to 2 hours, we'll have only 12 candles for a day. 4 hours, about 6 candles and then about. So as you go to the bigger time frames, the candles get fewer, and that is what the candles represent each day. Each candle here represents 1 day. That means as of this, let us zoom in a bit. Let me just explain one more thing about time frame analysis. Look at this. So this is now it's 7 p.m. right? So in about 6 p.m. the market was actually somewhere around 3129. Let us use a line so we can see that clearly. This was to use time. This is what time frame about. It gives you information about what's happened. Even if you were not around when this happened, you cannot simply come to your chart and see what's happened, right? So this is it. So look at this. The candle open around here. This is the open price. This is $3125. That means Ethereum was at the price of 3125 by around 6 p.m. and then it dropped down to 3042. That means Ethereum dropped about $20. Sorry, from 3125 it dropped down to 3037. Right, Ethereum dropped more than $70 or thereabouts. Right, just this drop. Ethereum dropped quite a bit with this. Ethereum dropped a lot with this. Right, so this kind of tells us what happened even if we are not around. Right, it gives us the perspective of what happened. Right, each candle here is 1 hour. So this is 5 p.m. candle, this is 4 p.m., this is 3 p.m., 2 p.m. and all of that. So this kind of tells us what happened, how did the price move, right? When in the previous time, right? I told you that technical analysis is simply using the current time frame to they're using price data to predict the future, right? So now we have known what these candles represent, and each candle represents 1 hour. So you can always skip to watch whatever time frame you want, 2 hours, 3 hours, and 4 hours. But this is each candle here represents 2 hours. And every 2 hours, the candle, you can see this candle is going to close in 1 hour 39 minutes. Then this candle will close. Right side is moving up and down, right? So these candles represent the price movement over a given period of time. That's the brings us to our definition, which says that time frames are a set of candles representing a given time frame and all of that, right? So let us go to let's go straight to multiple time frame analysis. Let's go straight into multiple time frame analysis, right? Let's go into multiple time frame analysis, and then we'll see where we can go from there, right? So when we talk about multiple time frame analysis, we are simply referring to the idea of analyzing different time periods of the market. What do I mean by that? And let me just go this way. The right way to analyze the financial markets using your time frames is what we call top-down analysis. This is the accurate way of analyzing market. Top-down analysis, right? This is top-down analysis, right? This may be too high for beginners, but with time you'll get used to it. This video is not something you should just watch once and just drop it. You must watch it over and over again to understand this thing. So when we talk about top-down analysis, we simply mean analyzing from the bigger time frame to the smaller ones. That means, as you can see, this is a weekly. So analyzing from the weekly, right, down to the 1 minute. That's what it simply means. Because the rules of trading is that the big time frames control the smaller time frames. The bigger time frames control the smaller time frame. That means the weekly controls the daily controls the 4 hour, the 4 hour controls the 2 hour, 2 hour controls the 1 hour, and like that, we can see progressing downwards, right? So that is why we have to always analyze charts or technical analysis from the biggest time frame possible. If you can find monthly, that is good. If you can find weekly, that is good, right? So that is where many traders make the mistake. Some traders will just open their chart and just rush to maybe something like 45 minutes, right? Some traders, so that's what they do. They go to 45 minutes and then place trade, place and begin to wonder why was my stop loss hit. They forget to understand that you have to bring in the picture of the bigger time frame before you can make your analysis or your predictions, right? So let us go straight to Ethereum, right? Now, top-down analysis. Let us explain that. Now, the first rule is that you must start from the bigger time frame, the biggest time frame possible. Depends on the kind of trader you are. If you're a swing trader, it's advisable you start analysis on the weekly. If you're maybe an intraday trader, you can start on the daily 4-hour for your bigger time frame. Then if you're a scalper, then you can use 2-hour, 1 hour, and all of that. I won't go into details for that. So that is not really part of the lecture for this night. But I want to understand that the bigger time frame controls the smaller time frame. And now we have to go down to what we call multiple time frame analysis. Right. So now let's assume that this is the daily time frame now. So on the daily time frame, we're having a bullish structure, right? The market is bullish on the daily time frame. This is the daily now, right? So right here, we have a daily time frame structure which is bullish, right? This is a bullish because why? The market is forming higher highs and higher lows and higher highs and higher lows. So this is a bullish time frame, and you can see the higher highs, the above the higher high, and all of that. So now we have seen this on our daily. This is a daily time frame now. Let's label this. This is our daily. That is the black line is the daily time frame, right? The black line. So we'll just put a black line there to make this easier so you won't forget. All right, so now, okay, sorry. So now this is our daily time frame, the black line, right? So now, believe me that for the daily time frame, right, to move from this point to this point, right, the smaller time frames will become bearish. Understand this. When the bigger time frame goes from the higher high to form a higher low, the smaller time frames become bearish, right? So many traders make this mistake, okay, because the 1 hour or 2 hour is bearish, and they believe that the market will continue selling and selling and selling. But they forget that each time frame forms its own structure independent of other time frames. That means for the daily to move from year to year, the 1 hour or the 2 hour will become bearish, and to become a bearish market from this point, you see 2 hour forming. That's what you see on 2 hour, right? From year to year on the daily, you see 2 hour doing something like this. The 2 hour being bearish, right? Well, 2 hour being bearish. So now, when it is bearish and this market eventually gets here to the daily higher low, what will happen, right? It's going to happen on the 2 hour time frame. Now, the market is going to do this. It's going to give us that break of structure. Remember that break of structure is when the market goes above the previous lower high, right? So we see this on the 2 hour time frame. The market will give us a break of structure and then give us our higher low, and then it's now join the bigger time frame to continue buying, right? So this is why we have to understand this. Since not this daily controls the 2 hours, so we want to take our trades when this big time frame aligns with the small time frame. That means you want to buy when the market has gotten to this area, right, and formed a higher low, and then give you that break of structure, and then you enter your buy, and then you rally up. I want to understand this thing, right? So that is the concept of multiple time frame analysis. The goal of multiple time frame analysis is for you to use the bigger time frame to identify the overall direction of the market, and then you use your smaller time frame to make your entries after a break of structure or reaccumulation or redistribution, or whatever the case may be, or whatever triggers your entry. Some people use candlestick patterns, meaning that if the market comes there, they want to see an engulfing candle, you know, inside bar, pin bar, all those reversal patterns. If you have read the candlestick Bible I told you to read, you know what I'm talking about, right? So you want to see the markets come into this region and give you that reversal pattern on the 1 hour, on the 2 hour, and then you can take your buy. And you know that daily time frame covers a lot of distance. So if you're buying here, you will have all this long move, right? And you know that normally you should always take your first profit at the last structural point, which is here. This is the last higher the last higher high, right? So you should ideally take your profits here at this point here before, if you want to then swing, you can take partials here and then hold it, right? So that is the idea of multiple time frame analysis. So now the daily was bullish, but from year to year, we had a 2-hour bearish structure because the market had to sell to form a higher low here, right? The market had to come and form a daily higher low at this point here, all right? So you see this daily higher low at this point here. So this the daily higher low has to be formed because market moves like this. It does not move straight. Market cannot just go buy straight. No, it has to go up, come down, go up, come down. So using the bigger time frame, you use it to know the overall direction, and then you use the small time frame what to give you this the little drawdown entry, the confirmations, and all of that. So ideally, your small time frame should be for confirmations. That means your 15 minutes, 30 minutes should be for confirmation of the bigger time frame structure. If your bigger time frame is forward, maybe you are an intraday trader, you cannot use 15 minutes, 30 minutes to confirm your move, right? So that is the idea of multiple time frame analysis. You don't just enter the markets because it's 2-hour bearish, and then you now sell here, you sell here, and then you wonder why the market stopped charge because you fail to recognize that there's a bigger structure in the market, right? So let us just look at something on it. Let's look at Ethereum, right? Let me just use something I have not looked at. Let me use a chart I have not looked at. I've been looking at Ethereum for a while now, right? I've been looking at Ethereum for a while. So let me just use a chart I've not looked at recently. Let's go to let's look at let's look at Litecoin. Is Litecoin available here? All right, okay, I've seen Litecoin. Let us use Litecoin to just illustrate multiple time frame analysis. So I want to start with my daily time frame, right? This chart has not been moving so well. All right, so let us zoom out a bit and see if we can find something of interest in this market, right? So now this is all right, okay. Okay, I'm not really seeing anything clear. This market has been quite bearish. What do I mean? Look at the structure of this market. You start from the past data to see what was happening. But if I can see something like a higher high, low, something like a high, something like a higher low, I can see this. I can see a break of structure. I can see a sell retest. Then it sold down. So this was the last lower high. Then it gave us a break of structure here. Came to give a retest, and then it bought. Still came down a bit, and this was the higher low. Came all the way to this point before coming back down. All right, this structure is not really clear on the daily. So let's go back to Ethereum. Ethereum is quite clear because I think Ethereum is one of the major coins, right? So let us go to Bitcoin instead. Let's use Bitcoin to see if we can find anything of interest. All right. All right, this is Bitcoin now. All right, now you can see that Bitcoin has been quite bearish, right? Why do I mean Bitcoin has been quite bearish? Look at this. We saw our higher high, higher low, higher high, higher low, the higher high. So you can see that Bitcoin has been bearish. Why? Because price came below the last higher low, right? And this has been a bearish market. As you can see, the market has been selling all the way. So now we have known that Bitcoin is bearish, right? Bitcoin broke structure on the small time frame. Can I go to this the 4-hour to see what happened? Let us zoom out a bit. Right, I'm not be able to exhaust this in this video alone. So you can see that there was a break of structure on Bitcoin, right? So that break of structure when the market came below our last higher low. You can see this clearly on the 4-hour time frame. And as you can see, the market after breaking structure, the market just keeps some kind of retest, right? Let us draw a zone. There was some kind of zone here, as you can see. There was some kind of zone at this level here. What do I mean by a zone? A zone because you can see markets came here rejected, came here, gave some kind of rejection, and then it came and broke through and then gave us a BS. This would have been an area for itself because you can see that there was a kind of flip zone. The markets came here, tap, and then continued falling and falling and falling and falling and falling. Right? So this market was bearish even on the 4-hour. Let us go to 2 hours to see if we can see something of interest. All right, I want to see if there was anything of interest on that chart. On the charts, I'm not talking about smart money now. I'm just talking about multiple time frame analysis. Just trying to illustrate how these things happen. Right. So, okay, not so really clear on Bitcoin. Right. So that is it about multiple time frame analysis. Just the idea of using the bigger time frame to predict the smaller time frame. Right. So let us use Ethereum. If you can find anything there, if we don't find anything, then we move on and we move on to the next class, because I have not taught you about Fibonacci retracement. That will be the next class. Then you understand multiple type analysis better. But I just want to introduce you to multiple type analysis before we go to Fibonacci retracement, right? Right. So this is Ethereum chart now. So if you go to the daily on Ethereum, you can see that Ethereum, right? So you can see the Ethereum structure. You can see higher high, higher low. This is the last higher low. Then we saw the market forming a new high. Right? This market is still very bullish, right? You have to, this market is still very bullish. This is very bullish market. This is higher high, higher low, higher high. So it's a very clear bullish market. Now look at this. Since this is a bullish market, now market always form higher high and higher low. Remember, so this is a very good buy setup. See a higher high, higher low, higher high. The market is coming to come and give us a higher low, right? I'm expecting the market to do this and then continue buying up. So now I have known that Bitcoin is bullish from the bigger time frame. Now I have to go to my smaller time frame to see if there's anything of interest. Now using daily, I can see something here. I can see something here, right? Let me remove this. Let me remove so I can see it clearly. Let me remove this, right? So let me remove this line. So we have known as Bitcoin is Ethereum is a kind of bullish, right? It's a bullish and uptrending market. So I can see something like this. There was some kind of liquidity sweep at this point, liquidity grab. Our equal lows here that were taken out, and then this is a kind of support. You know, I told you to read on support and resistance. So there's a kind of demand zone here, right? You can watch my video on demand and supply. So this is a very good demand zone, right? In it, what I mean by demand zone? Demand zones are those zones as you see heavy push. I mean, after this sell, can you see what happened from here? The market bought for months. This is months. The market bought for months from this region here. So this becomes a demand zone. A demand zone is a zone where there are many buyers, and a supply zone is a zone where there are many sellers. So this is a good demand zone, and this is how to add your confluence. So now market is bullish on daily. So you can now see that this is an area of interest. Now, what do you want to see? I want to see that break of structure on the 4 hour. So you go to the smaller time frame now. You mark the zone with a bigger time frame, and then you come to the smaller time frame. Now we are looking for the market to give us something for a buy. I want to see that break of structure or for a buy on the smaller time frame. So I'm looking at the 4 hour now, right? Let me use 2 hours to see clearly. Every time you do it, you go from a bigger time frame to a smaller one, and now we can see that. Oh, you can see clearly that this is the last lower high I can find there, right? You know what we mean by multiple analysis. So you can see our lower low. See, this is our lower high, and then our lower low, right? This is our lower low. So now for this to be a very clear break of structure, we want to see Ethereum come above this point. Right? Times we want to see Ethereum push from here, come into break, break above this last higher low, right? Then come and give us our retest, and then we buy. That's just basically what multiple time frame analysis is all about. You start from the bigger time frame, you identify the structure, you identify the key levels, and then you anticipate the move at a retest or a break or structure from the smaller time frame, right? So if I want to do it this way, so I'm missing something like, I'm missing some kind of structure here, so something here, right? I'm seeing something like, okay, let me remove this. Right, so okay. Right, can we use this our break of structure, because this low is actually low, so you can wait for this to have an early entry. So want the market to clear. So want the market to clear here. The market to clear this last lower high here. Then you know this is not always very perfect. Market to do this and then give us our retest and then start buying, and it's going to be a long-term buy. It's going to be a very long-term buy. So if you're anticipating to buy Bitcoin, start buying Bitcoin now. Just buy Bitcoin, right? So that will be the end of this class. The next section we're talking about Fibonacci retracement and risk management, and then that will be the last technical class, and then we'll have our mindset score, and then we'll have a question and answer section. So I would like you, if you have any questions, start writing them down, because I'll give room for questions tomorrow evening, and then I'll answer all of them on Monday, right? So that will be the end for now. There's no assignment on this. I don't want you to watch this video and keep on watching it until you understand it. There's no assignment for this. Just watch it and go to bed, right? Then tomorrow we'll continue. So that'll be the end of the class. Cheers and God bless.